Hi everyone. I wanted to take a few minutes to talk with you today about what's going on in the stock market this week. As we know, we've seen the Trump administration come out with tariffs that have decreased the stock market by about 9% in 2 days. For the year, it's down about 13%. We have a lot of uncertainty and a lot of volatility that's happened, which I know is making everyone nervous. Understandably so. We're all thinking about previous time periods and wondering, is this like 2008 or 2000? Or is this something totally different? What can we expect? And so the truth of the matter is we really don't know what the future holds. But we do know there are elements of this potential crisis that look similar to previous ones. So, what do we know? We know that the U.S. government is running really high deficits. We're at about 37 trillion. We also know that we've had about 10 to 15 years of really low interest rates that are fueling this high valuation in stocks. Coming into 2024, we've seen some of the highest valuations in stocks than we ever have in history by some measures. And so you add that on top of sticky inflation. The Fed tried to raise rates really quick to combat inflation. It's now started to come down, but so has the growth in the economy. Inflation was still running high enough that the Fed can't keep lowering to combat the slowing economy. So here we are. We're faced with potential tariffs, a slowing economy, high debt, and ultimately a situation where we don't know what the future holds, so all that uncertainty, people are just selling stocks. If we look at history, in the 30s we had a protectionist, rising interest rate environment which created the Great Depression. Then we fast forward into the 70s. What happened? Well, the Fed waited too long on the inflation front, so they had to raise rates really, really high, and it slowed down the economy and eventually the markets. The same thing happened in the 80s, the early 80s, if you recall. And then in 2000, with the tech bubble that was fueled by lower interest rates under Alan Greenspan, really came to roost during the tech bubble fall during 2000-2001 time period. And then roll out to 2008, and what happens again? The real estate crisis with the government spending too much money, not having enough regulations in place. We ran into that situation again. And these are the things that we're all worried about today. And it makes sense because today's environment has an element within each of those previous time periods that is reminiscent of large downturns. Well, we're not sure that this particular situation leads to large drops in the market. However, it is something that we're concerned about, just as you are. But we want you to know we don't want you to go it alone. We're here for you. We're here to reassess those goals, to reassess the portfolio, and make any necessary changes to help you be less stressed and sleep at night. Well, in the past, we've always invested thinking about your plan in these uncertain times that we know would come about. This is no time for us to panic. Markets historically have always recovered after downturns, and during those downturns have presented opportunities. While we don't think we're there at this point, we just want to recognize that we understand this is a stressful time period for you, and we're here whenever you need us. So feel free to reach out to us and know that we're watching this thing very closely and are concerned just like you are, and we're here to help. Do not go this alone and make unwise financial decisions.